So NVIDIA is going to be one of the biggest catalysts, no doubt, for the market next week when it reports earnings. And you and I will be there breaking down the numbers. But ahead of that, we've seen some price target boosts. Talk us through what the analysts are saying here.
Yeah, and the analysts are still very bullish. Despite that pullback you mentioned, we have seen NVIDIA under some pressure of late, but we are seeing some really bullish calls here from the analyst community. So Wells Fargo raising their price target today up to 265 from 220. Right now they're trading at 187.21. They're keeping that overweight rating on shares as well. They're saying that they see the third quarter and fourth quarter of 26 both guiding upside. They think that they'll come in better than expected. They're also increasing their estimates. Those increased estimates are the reason for the price target change. They also think that there will be a consistent 2027 30 times PE multiple, given NVIDIA's strong growth and what they call its best-in-class positioning for continued data center and AI investments. And no argument there. I think pretty much across the board, everyone acknowledges NVIDIA is the leader. Morgan Stanley also raising their price target. They're up to 220 from 210, keeping an overweight rating. The firm says that their industry checks are showing that material acceleration and the strongest results that they've seen in the last few quarters in terms of its Blackwell ramp up. So they're raising their estimates above street view and says that they still believe that they're conservative despite raising them above street view. They said that Blackwell remains the AI chip of choice and that Vera Rubin demand signals are very strong. And they also believe that NVIDIA shares have underperformed their AI peers, but that should reverse. And that's not the first time that we've heard that sentiment echoed here on the network. And then our last one is Oppenheimer. This came in yesterday. Now, they raised their price target up to $265 from $225. They also maintain their outperform rating ahead of results. They see that same upside consensus to Q3 sales. They're expecting EPS of $1.25 on revenue of $54.7 billion. Q4, they're expecting that to rise to $61.5 billion, EPS of $1.42. They're saying that's led by the GB300 Ultra. They're also saying that these hyperscalers continue to upside their CapEx, reflecting insatiable AI appetite. They're viewing that as a positive, not as an AI bubble signal. And adding that their backlog is growing. So a lot of really strong fundamentals here, a lot of potential growth drivers cited in these reports. And it is important to note, even though NVIDIA has pulled back recently, they're still up more than 35% this year. And in the last four of their price has doubled in 4 of the last 5 years. So, just exponential growth when you're looking at their chart, which, like you mentioned, comes to the point that if there's any miss at all here or anything super positive, we are going to see the market move along with NVIDIA no matter which direction it goes.
Yeah, and there's a really interesting Wall Street Journal piece out this morning talking about how obviously NVIDIA has really wanted access to the Chinese market, but then you've got now Amazon and Microsoft going, hold on a second, not so fast, which is a bit of a sort of rare divergence we're seeing between what are two big NVIDIA customers. But even with this and sans China, the analysts remain bullish. So I suppose that's going to be an interesting theme playing.
Over the last 5 years, NVIDIA has outperformed Wall Street earnings projections 90% of the time. But in the last 4 quarters, the average difference has only been 6.5%. NVIDIA predicts no revenue from H20 chip shipments to China in Q3 due to continuous export restrictions on advanced AI chip sales. According to Wall Street, NVIDIA's Q3 revenue is expected to reach $54.83 billion, a 56% year-over-year increase driven by demand from data centers. As the clear market leader in artificial intelligence, AI chips, NVIDIA powers data centers and makes advances in generative AI possible. With its stock rising in tandem with the AI boom, the company has evolved over the last few years from a graphics specialist to a tech powerhouse. NVIDIA has demonstrated steady outperformance over the last 5 years, surpassing Wall Street's earnings projections 90% of the time, often by over 30%. However, the chipmaker has only averaged a 6.5% beat over the last 4 quarters, most likely as a result of analysts becoming more accurate in forecasting its performance. NVIDIA's impending third-quarter results, which are scheduled to be released on November 19th after market close, have investors' full attention. Wall Street predicts $54.83 billion in revenue and $1.25 in adjusted profits per share, which is up 56% and 54% year-over-year, respectively, indicating that expectations are high. As whisper numbers, or unofficially higher projections that are circulating among traders, indicate that NVIDIA needs to deliver an even greater surprise to avoid disappointing the market. The pressure is increasing. Any shortfall might prompt a sell-off, especially given its importance as a bellwether for the broader AI business. NVIDIA's dominant position in the AI ecosystem is probably the reason for its latest quarter success. The company has benefited from the need from hyperscalers such as Microsoft and Meta platforms by being the main provider of GPUs for training massive language models. Due to Blackwell chip ramp-ups and collaborations with AI pioneers, data center revenue reached all-time highs in the most recent quarter. With analysts predicting 54% increase, these factors might drive Q3 revenue toward or over the planned $54 billion. On the bottom line, better margins from economies of scale and software integrations, such as CUDA, may lift adjusted earnings to roughly $1.25 per share. In addition to hardware, NVIDIA's Omniverse simulation platform has been popular in sectors including robotics and automotive, generating a variety of new revenue sources. Expanded agreements with Oracle for cloud AI infrastructure are among the recent victories, which could result in millions more sales. All things considered, these tailwinds set up NVIDIA for yet another impressive performance, solidifying its market capitalization lead on the S&P 500. Results could be tempered by setbacks despite the momentum. NVIDIA's capacity to provide China with cutting-edge AI chips is still restricted. CEO Jensen Huang recently acknowledged that there was no income from H20 chips in Q3, and there is no indication that this hangover will end anytime soon. The loss of the high-margin data center sector, which was once a major growth driver, may limit upside even though the company still sells less sophisticated technology to Chinese consumers, such as gaming and automotive chips. According to analysts, this might reduce potential revenue by several $billion. Furthermore, a 7.2% stock decline was caused by hedge fund manager Michael Burry's bearish put options on NVIDIA, which were made public last week. Burry recently declared that he was closing his Scion fund and returning investor funds because he no longer understood AI market valuations. Broader market dynamics, like rivalry from advanced micro devices and an impending financial constraint, increase uncertainty. A softening of demand or problems with the supply chain might put pressure on margins and result in a miss to the guidance for Q4, when Wall Street anticipates $61.33 billion in revenue. Given its strong demand for AI and its 90.5% beat rate over the last 21 quarters, NVIDIA's earnings next week could be a blowout. However, if results are below whisper numbers or its guidance is disappointing, there is a greater likelihood of a negative surprise due to China constraints and smaller recent beats. NVIDIA's stock has had two brief declines following its last three earnings announcements in February, May, and August, highlighting possible post-report volatility. If long-term investors have faith in NVIDIA's fundamentals, which appear sound overall, they may purchase before results are released, but risk-averse investors may hold off until guidance is clear. The chipmaker's stock has dropped in recent sessions and is currently down 12% from its peak of over $200 at the end of October. Core. We've just stunned the market with news of a data center partner's build-out delay, and we may see other AI stocks run into similar difficulties as the hunt for scarce resources heats up. Perhaps the wisest course of action would be to wait and see before acting. My prediction is that NVIDIA will beat Wall Street's projections on November 19th due to its outstanding earnings beat record. Nevertheless, a beat in results does not guarantee that the stock price will increase after the announcement. Long-term investors should focus on NVIDIA's quarterly results, outlook, and management's comments on the earnings call, rather than getting excessively hung up on the market's reaction. Following market close on Wednesday, November 19th, NVIDIA is scheduled to release its third quarter fiscal 2026 results. For the past few years, NVIDIA's quarterly reports have become the most anticipated of every earnings season due to its dominance as the supplier of artificial intelligence, AI processors, and related technology. NVIDIA is the most valuable firm on the S&P 500 index in addition to being the biggest AI company. It is therefore regarded as a harbinger, or indication, for both the AI industry and the stock market as a whole. The timing of this impending release is quite intriguing. The announcement that well-known hedge fund manager Michael Burry had placed large bearish bets by purchasing put options on NVIDIA stock and another well-known AI business, Palantir, in the third quarter caused NVIDIA's stock to drop 7.2% last week. I think Burry's wager against NVIDIA will most likely be unsuccessful. NVIDIA is doing incredibly well and is primarily to blame for making the AI revolution possible. Similar to the previous quarter, NVIDIA will not report any H20 data center AI chip sales to China in its Q3 results. Investors shouldn't anticipate any changes on the China front in light of CEO Jensen Huang's recent remarks. Following an earnings release, a company's forecast in comparison to Wall Street's expectations frequently has an impact on the stock price that is at least as significant as the current quarter's results. The analyst consensus estimates for NVIDIA's fiscal fourth quarter, which concludes in late January 2026, are included below. NVIDIA has a strong history of outperforming Wall Street's profit projections. I expect it will do so again on November 19. The data for the last 21 quarters, or slightly more than 5 years, is shown here. In order to demonstrate that the earnings beats have been somewhat lower lately, I also separated apart their results of the previous 4 quarters. In my perspective, this is hardly a cause for alarm. The main cause of this dynamic, in my opinion, is that Wall Street bases its forecasts on guidance that NVIDIA's management has recently been increasingly adept at predicting. Instead of concentrating on the stock price fluctuation following the release, long-term investors should pay attention to NVIDIA's performance. The performance of a stock following the announcement of its earnings is usually influenced by guidance and general market conditions. For the previous 10 quarters, the following data illustrates the size of NVIDIA's earnings beat and the movement of the stock price on the day after the release. Why 10? Think of this time as the generative AI era. 10 quarters have passed since generative AI started to dramatically improve the performance of NVIDIA's data center platform in early 2023. When OpenAI unveiled its ChatGPT chatbot in November 2022, generative AI first astounded both tech executives and many users. NVIDIA stock didn't climb every time the business beat Wall Street's earnings estimate, as the graphic indicates. The performance of a stock after an earnings announcement is almost always significantly influenced by guidance and general market conditions. Other elements may also be involved. Consider fiscal Q2, NVIDIA's most recent quarterly report. The top and bottom lines for Q3 forecasts, as well as the quarter's revenue and profitability, surpassed Wall Street's expectations. The stock did, however, modestly decline. That was probably brought on by investors' worries about the unpredictability of the AI chip scenario in China at the time. To put it briefly, long-term investors ought to pay more attention to the information presented in the earnings announcement than to the market's immediate response. Over the near term, there can occasionally be a discrepancy between a company's financial results and its stock price. Nonetheless, NVIDIA's stock price is anticipated to increase in the long run as long as it continues to provide solid results and projections. Even though NVIDIA is the most valuable corporation in the world, it has plenty of room to grow even more in the upcoming year. The company still has a large moat to keep rivals at bay and a ton of growth potential ahead of it. Over the past few years, NVIDIA has been a growth engine, and it doesn't appear that this trend will slow down anytime soon. Even though it was no longer able to sell its chips in China, its sales increased 56% year over year to $46.7 billion in Q2. Its data center segment, where its graphics processing units, GPUs, have emerged as the foundation of the artificial intelligence, AI, infrastructure build-out, is primarily responsible for its growth. In Q2, its data center revenue surged 56% to $41.1 billion, and it was up about 4x in the past 2 years, as it made $10.3 billion in data center revenue in its fiscal 2024 Q2. That's amazing growth. The environment that NVIDIA has created around its potent chips is equally as strong as the chips themselves. This all starts with its CUDA software platform, which allows developers to quickly program its processors for diverse activities outside its initial function, which was to speed up graphics rendering in video games. Although adoption was initially sluggish, the company's decision to push the software into academic institutions and research labs that were conducting early AI work was a wise one. CUDA was developed in order to diversify beyond the video gaming sector. This led to much of today's basic AI programming being created on CUDA and most engineers being educated on its software. The wide moat the corporation faces today is a result of the significant expenses associated with rebuilding code and retraining developers on other platforms. However, NVIDIA did not limit itself to hardware and software. Another significant benefit is its networking portfolio. It developed NVL Link, a proprietary interconnect mechanism that makes its processors even more potent by enabling them to function as a single, powerful unit. In the meantime, it was able to obtain the networking components necessary to provide comprehensive end-to-end solutions that it refers to as AI factories, thanks to its previous acquisition of Mellanox. Its networking revenue almost doubled to $7.3 billion in Q3 inside its data center sector, demonstrating its strength in this space. NVIDIA demonstrated its domination in the GPU industry in Q2 with a staggering 94% market share thanks to its moat. Cloud computing companies and other hyperscalers that own large data centers are increasingly turning to custom AI chips, known as ASICs, application-specific integrated circuits, to help run some AI workloads, particularly for inference, where NVIDIA's CUDA moat isn't quite as wide. As a result, the company is beginning to see some increased competition. Although ASICs can cut expenses and power consumption, they lack the flexibility of GPUs because they are pre-programmed for particular functions. This still provides GPUs a competitive edge in a world where technology is evolving quickly. GPUs are typically more widely available and have lower beginning costs than ASICs, which also require significant upfront expenses to produce. NVIDIA's GPUs are still used by businesses that have created their own proprietary chips. This can be seen with Amazon, which, while it's employing its own bespoke processors with Anthropic on Project Rainier, it just struck a big $38 billion 7-year deal with OpenAI, where it will use NVIDIA GPUs to power AI workloads. There are no indications that the expansion of AI infrastructure is slowing down. On the contrary, it is accelerating. Cloud computing firms have been steadily raising their capital expenditure budgets in an attempt to meet the demand they are witnessing, and OpenAI has agreements in place to spend a significant sum of money on AI infrastructure in the upcoming years. NVIDIA is still in the greatest position to benefit from this expansion, even with more competition. In the meantime, the stock's valuation is low enough for the company to still have significant upside from here over the next year, with a forward price-to-earnings (PE) ratio of less than 29 times next year's analyst estimates and a price-earnings-to-growth (PEG) ratio close to 0.75 times, with less than 1 times considered undervalued. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.